still on to maintain that EBITDA margin guidance for the full year.
Okay, Aniket Mhatre, who is the research analyst at HDFC Securities, joins us now. Aniket, good afternoon. We, of course, called you because of the resignation that took place at Eicher Motors. But I want to ask you also about the auto ancillaries that have been surging. Despite the rise that we've seen, do you see fresh upsides in any of these names that I mentioned? And if yes, why?
Hi, good afternoon, Sonia. Thank you guys for having me on this show. So quickly on the auto ancillaries, we at the moment have three stocks under coverage since we are ramping up our coverage. And one of the names that we certainly like in this is Bharat Forge. If you see, Bharat Forge has been underperforming because of issues around the outlook for US Class 8. But our argument has been always that, all its other business segments continue to do extremely well. Be it domestic series, be it non-auto, both domestic and exports, or even be it their overseas subsidiaries. Each of their categories, apart from US Class 8, are doing reasonably well. And even if you assume a slowdown in US Class 8, I think its other categories will help offset the slowdown in US Class 8. Add to that, you have the currency which is in its favor since they are major exporters. INR depreciation certainly benefits Bharat Forge, which is what we also saw in the Q1 numbers. Q1 numbers were actually ahead of even our expectations for the simple reason that all other segments have done exceedingly well, and even currency has turned favorable. So we continue to like Bharat Forge, which actually hasn't done much in the recent rally that we have seen in the auto names.
Okay, so Bharat Forge is a stock that you like, but I know these companies are not in your coverage, but still wanted to ask you, so many of them are doing exceptionally well. Precol, Rajratan Wires, Asahi India has been a great company for a very long time. Any of these themes that you'd pick up for the long-term investor?
Right. So, from a long-term investment perspective, to be honest, we are looking at a theme that's playing out, which is China Plus One, which is helping Indian auto component players gauge a lot more orders from global OEMs. A lot of players lot of players who have facilities in India and exports abroad are seeing increased traction going forward. So that is one of the themes. The other theme is, of course, around the EV transition story, right? Where both India and supplies to Europe and along with the lightweight story that is evolving, a lot of global OEMs also want to sort of take source from India. So these are some of the themes that certainly will play out. And as we ramp up coverage, you will see some of these names, that we will track going forward.
Okay. Just wanted to ask you now about Eicher Motors, these exits which have taken place on the management front, the top exits, around 4 to 5 just in the span of 1 year. How would you read it? Do you think it shakes your confidence in the company?
Not really. To be honest, we have seen senior level exits in Eicher in the past as well. So that would not be a cause of concern at the moment for us. What is certainly need to focus on is on the business front, and I think they are doing reasonably well around the business front. If you look at the recent launch of the Hunter 350, I think it is seeing a very strong response. If you look at the order backlog, we check with some of our dealers fraternity, and we understand that the order intake for Hunter 350 is extremely encouraging, and it can be the next growth driver that Eicher was looking at. They have talked about their rebalance strategy in their recent analyst meet, wherein they want to sort of refocus on profitable growth, and I think the Hunter 350 would allow them to do as much. Plus, on top of that, they have other product launches lined up as well, which is extremely encouraging. So from a business perspective, I think they continue to do reasonably well in my view.
Your thoughts on Bajaj Auto as well as Hero Motors?
Sorry, I missed your question.
Your thoughts, Aniket, on Bajaj Auto and Hero Motors?
Yeah, so on Bajaj Auto, we are not as positive for the simple reason that exports seem to be facing headwinds, be it in Africa, where we are seeing some sort of a ban, likelihood of a ban coming up in places like Nigeria, which is clearly concerning, given that Africa is one of the largest markets for Bajaj, and to that extent, exports is one of the largest growth drivers for Bajaj. That is one concern area. The other concern area we are looking at is three-wheelers are transitioning to EVs very fast, and three-wheelers is a very high margin category for Bajaj Auto. So those are the two clear concern areas that we see for Bajaj, and current valuations leave a very limited room for upside. On Hero MotoCorp, we continue to like the name. One is clearly valuations are extremely supportive right now, and we believe once rural demand picks up, I think Hero will be the biggest beneficiary of a rural revival. Add to that, if you have seen the recent traction, the Hero has actually recovered back lost market share from last year. So in that sense, I think Hero seems to be very well placed to continue to deliver good returns for investors.
Okay, finally then Aniket, on M&M, there's a lot of talk that next month M&M will be unveiling its electric vehicle, the XUV 400, and it's going to give a tough fight to the Tata Nexon. So there's a lot of excitement around it. The stock is at a fresh 52-week high. Do you see more upsides here?
Yes, certainly. So M&M is one stock within the OEMs that we continue to like. If you see, even leaving aside EVs, right, the current recent EV launches, be it the XUV 7.0 or even the Scorpio, they have seen a phenomenal blockbuster response. 1 lakh order bookings for a Scorpio have been unheard of in the past, and unheard of in M&M, right? So it is a question of now how soon they are able to ramp up production capacities to satisfy these bookings, and they are expected to see a very strong market share recovery in the coming quarters. So M&M we continue to like, and even the EV strategy that they have recently unveiled. They've unveiled the Born Electric platform with 5 new launches over the next 3 to 4 years, which continues to highlight that they are clearly on the right track as far as their business momentum goes. So M&M is clearly one stock within OEMs that we continue to be positive on.
Okay, all right, Aniket, we're going to leave it on that note. It's been an enriching conversation that we've had with you. Thanks very much for joining in and talking about a whole host of stocks from the auto as well as the auto ancillary space. Just before we take a short break, I just wanted to pull up Lupin because there's important news. Remember that the stock has been under pressure because they've received a complete response letter, which is a set of queries for Spiriva generic, the inhalation product from the US markets. But the news today is that they've received approval for the generic version of Spiriva in UK. So the UK MHRA, which is the UK regulator, has given the go-ahead for this particular drug. If in case it is an eventual positive read-through for the US, and that, maybe it would probably see a happier outcome, a sooner outcome in terms of approval for the US because the UK has given its go-ahead, then that would be a positive reading. So nonetheless, important news and positive news coming in for Lupin, considering that the stock has been down and out for the past couple of trading sessions. This should probably help lift sentiment a little bit. Time for a break now. Prakash Gam